It's incredible. We're 3 minutes late. I'm Jay O. Welcome to Jay's Corner. And as usual, what do we have? We've got our new co-host. It's Cass. Cass, how are you today? Get us going here.
Hey Jay, ready to dive into the chaos? Let's get this show on the road. What's first on our agenda?
Tell us what our agenda is. You're the one with all the brains here.
All right, Jay, today's agenda: Medicare solvency, cost planning, and the latest tariff updates. Let's break it down and get into it.
What happened to the props?
Right, can't forget the props. We'll kick off with a shout out to our sponsors and supporters, then dive into Medicare solvency, cost planning, and those tariff updates. Sound good?
All the glitches are not yet worked out, obviously. We're going to get going here. Today, we're going to have a very, very busy amount of time here. We've got a full agenda. We're going to dive right into it. Like I said, Cass is going to be super, super valuable in our world. You'll see very shortly. We're going to keep it tight because what? At 2 o'clock, I've got to see Rory complete the career grand slam. Let's hope. Don't forget, this is the key. The Substack here. So many updates given the pace of updates. It's been amazing. It's been quite incredible, changing directions at a rate that almost no one can keep up with. I'm pumping out updates, podcasts as fast as is warranted. That's been enormous. You can see an example here. Spotify, anywhere you get your podcast store where it's free. But anyway, here you go, and you can see we've had a podcast and a release both here on YouTube as well as on Spotify almost every day last week. That's how fast and furious it has been. The number of issues is coming us at like incredible speed. 5 podcasts in a week. My goodness. So back to it. This is where we're going to get to Art of the Fold. Ultimately, folding was right. I'm not going to, we're not going to overly debate exactly, every single step, but we're going to discuss where we are today. Start where you are. One of the mantras, one of the main messages here on the channel. Okay. Let's get to Medicare. We do have some healthcare cost updates. Okay, on Medicare, I reviewed this last week. The first takeaway here is GLPs today, as of now, are not being covered by Medicare. If the reason is just weight loss. Okay, so if you have hypertension, if you have a medical reason for the prescription, then your Part D plan will cover you, your Medicare Advantage plan will cover you. That depends on the plans. Okay, so it's not the federal Medicare system that would be preventing you. It would be your specific Part D. It would be your specific Medicare Advantage plan. It is not Medicare federal rules as a whole. That said, Medicare does have the right to say the entirety is not going to cover Wegovy if it's only for weight loss. It's a very important distinction. It's a subtle one, but it's one that may affect you if you are taking weight loss medication for weight loss control. If you're taking it for diabetes, if you're taking it for hypertension, that is different. That is different. And then you're going to want to check with your Medicare Advantage plan, your prescription drug plan. The recent days, we've had this headline. And this is true. This is true that Medicare is not bankrupt. So what we've had is we get these solvency reports. Every single year we get them. And so it's like, okay, well, there are different pots. And by pots, I mean places where the money is allocated from the federal budget. Some of this is mandatory, which is for Part A, newcomers to Medicare, that is the hospital insurance. There's Part B, which is a combination of the mandatory plus the federal budget, which changes every year. Okay, the same can be said about Part D. So a lot of times we get, the politicians, both sides of the aisle, every type of philosophy that all of a sudden, we get, oh, well, we're going bankrupt, we're going bankrupt. As you know here, you can see it here on my private website, which is just really about, what I think about the way that we are talking about, financial matters. I'm not here to be a politician. I'm not here to be a philosopher. It's been pretty interesting over these past days because I've been weighing in on the tariff matter as well as the ripple effects that will have on our economy, as well as, and most importantly, that how it would affect you, whatever your place is, whether or not you, like me, are the owner of Jay's Rib Shack, which is my fictitious small business, whether or not you're a person, a W-2 employee, whether you're a federal employee working for a branch of the government. My point is that the current events is going to affect you differently. And then, of course, you're going to have your own personal philosophy and politics on top. I'm not here to change your philosophy or politics. I'm really not. I'm trying to have this conversation so that you have facts. And if you can't accept facts, that is a you matter. And oh yeah, by the way, I can identify you easily because you've hit unsubscribe, which I see. I'm like, okay, this is a person who just simply will not face facts. It is difficult, very difficult for me to make suggestions for people's financial well-being, financial peace of mind, if you do not have very good command of facts. If you have command of facts, if you have command of the idea that I'm just trying to present these to you, then we can move forward from there. It's kind of a litmus test in a way. All right. Medicare is not going bankrupt. The reality is it was not going to go bankrupt. Okay, so I don't lose any sleep. I lose I lose no sleep. That said, there's a substantial amount of noise going around at Social Security Administration that actually should be an extra line item here. Let me put it in here. Okay, SSA problems. And this is a red tape matter. You can see I've highlighted it here. Social Security Administration offices are manned by people. Okay? Getting in to see these people is difficult, if not impossible, depending on your location. The result is that your application for Medicare is approved by the Social Security Administration because they're checking to see how many quarters of credits you have, to see whether or not you are entitled to the application. So whether or not your application will be approved. I try not to use the word entitlement because, that becomes, kind of like a political mudball that gets thrown around. The point here is that Social Security Administration is the location where your Medicare application will be approved. There is substantial lag time. And to make it worse, what has happened here is that Part B, they're both Part A and Part B, to be candid with you. I've got to add them both. Right, so Part B, the issue is if you send in your Part B application, it is supposed to start in the very next month after you send the application. The issue is, let's just say today, so today's April 13th. In theory, they're going to get your application and boom, Part B starts on May 1st. That is going to ultimately be true. Ultimate federal regulations have that. That said, there's the practical reality of the fact that Social Security Administration has to handle your application, and that is proving difficult. The reality is that I have made this point in Maximize Your Medicare, my book. I'm the author of Maximize Your Medicare. For those not up on current events, and my videography doesn't allow me to, flash up the book cover. Available at Amazon, anywhere you can buy a book. It is a published book. I've made this point, which is that this administration becomes a complicated hurdle to cross. Because now, if you send it in early, right? So you have this 3-month window. So let's just say, for example, you turn 65 on May 3rd, right? You could have sent in your application in February. That would have been fine. It will read May 1st. The issue is for people who are enrolling in Part B after turning 65, now it becomes very tricky and should not be underestimated. Because that person cannot send, let's just say, for example, you're going to retire at the end of this month, April 30th. You want Medicare to start on May 1st. You send in your Part B application today, it'll be fine. Ultimately, it'll read May 1st. Even if Social Security Administration doesn't actually address your application on, let's just say, for example, it gets piled on a stack or there's a computer bug. All of these are happening, by the way. Ultimately, Part B will read May 1. This will be unsettling for those people who are in urgent need of health care services. It will be. We deal with this very frequently, that to make sure that people are comfortable with the nuance. For the person who, that same person, let's say that person's 67, they're waiting for full retirement age under Social Security. So they wait until they intend to enroll in Part B on May 1st. They know this month in advance. They say, hey, why don't I just send it on February 3rd? The problem with that is that since they're beyond 65, Part B would read March 1st, unless you write it in. There's no guarantee Social Security Administration personnel are going to handle that correctly. So now you could be in this situation where you are paying for Part B for 2 excess months that maybe you shouldn't even be on that plan, because you now realize that your large group plan or your small, and especially your small group plan, is inferior. So now you can hear how entangled it can get. In the text below the video, you can send us an email. We'll take you through it. We're licensed. We're able to take you through it. We've handled this situation. This will become more common as people work beyond 65 on an increasing basis, whether or not they want to or whether or not they have to. Let's go to Part A. It's also complicated because they're going to, in many cases, backdate. They're going to backdate your Part A by 6 months. And even that is complicated, that their calculation of the 6 months, I've seen errors here. In fact, somebody out there, Tom, said that I mishandled. No, what ended up happening is Social Security Administration counted the 6 months wrong. The problem with that is that you cannot be contributing to an HSA at any date after the Part A has been turned on. That would be a tax violation. So now you can hear, right? I did not actually intend to make this segment a 10-minute segment. I didn't. But it goes to show you how complicated this has become. This is the part that has to be handled with care. From there, we've got the standard question, Medicare Advantage, Medigap. We've guided many. I saw a video the other day, I'm not going to name the channel, about a bunch of hysteria about wrongdoing by licensed people. I'm not Chicken Little. I'm not a person who says, okay, everyone's trying to rip me off. I just don't. That's not my outlook, right? That said, I'm not out there candidly. I'm busy talking to Cass. I'm busy with our clients. I'm busy with, creating content for people who are newcomers or people who want to have some kind of clarity on in a very confusing world. I'm not out there socializing to talk to other agents on how they're running their. I don't know any of that stuff. All I know is there are specific rules around Medicare marketing. We're following them to a T. You never get an outgoing call from me from us to suggest Medicare Advantage. That's just not a thing. Even though I am very aware where the gray lines are, I'm very aware that this outgoing call is being made. Unfortunately, I can tell you that one of my clients unknowingly switched their Medicare Advantage plan because they were the victim of this call, because they didn't understand the full subtlety, the full ramifications of other posts here that I've made. I've warned people in advance that this is going on, and I've also given you your suggestion on how to prevent it. And the simple way is, the first, easiest, simplest way is, tell me what your NPN is. NPN is the single number that is your identifier. And to give you an idea, that's in the text below this video. I'm giving it to you right up front. Just to say as a signal to you, hey, I'm going to follow the rules. And there it is again, down underneath the email on the left side of your screen. I realize it's tough. And I don't want us to live and I wish I could say that wrongdoing doesn't occur. I know it does. I know that we're not going to be any part of it. Clean and simple from my perspective, but I can understand that we live in a skeptical society. 20 minutes in, we're not going to be an hour. We're going to start on the second segment, which is the tariff matter. It has been a wild period. Wild. And make no mistake, this is the video. This is the photo that I've put up. This is the photo that I used here when describing yesterday's reversal. So it's not one reversal, it's two reversals in 3 to 4 calendar days. The reality here is I thought that a reversal was likely last weekend. That the financial markets would, and the turmoil, tremendous amount of turmoil in a very short period of time, would have caught the administration's attention enough that it would have listened and said, hey, we've underestimated the world's market's reaction. Because in the long run, it could be, I'm not going to say, right? No politics, no philosophy. I can see a scenario how the different pieces fit. I discuss them with Cass during these podcasts. Please go and listen to them either here on YouTube or on Spotify. Like and subscribe to this channel. I'm going to get around to trying to be better at asking you. The point here is I thought that the market turmoil would have caused some adjustment a week ago It didn't come there on Monday, and as a result, the market reacted. People thought of doing, boy, this is real difficult. It is why I then have this us here. We've had two folds. Two. To review, on Tuesday, there was a 90-day pause. 90-day pause on every country, basically, except China. Now, we're not going to get into the mechanics here. And by mechanics, what I mean is the fact that they're going to individually try to negotiate with all the other countries during this 90 days. I don't know, candidly. I'm not there. I don't know what the staffing's like. I don't know. They're going to have to run these in simultaneous order across every country individually because the different mix of exports and imports is going to be different from country to country. I find that real difficult, even for organizations which are very, very prepared in advance for such an outcome. Nothing tells me that that organization actually exists today. Nevertheless, that is what happened on Tuesday. What we got, and I haven't even looked at, I'll just show it to you just because I have not prepared this in advance. You know, we're still dealing with a world where I'm doing this on the fly with, you know, I have the outlines of what I'm going to say, but not the individual things. And here it is here. You can see that, for example, the S&P 500 roared higher. Let's just see if we can undo changes, like discard. Oops. What do we have? We've got a new change. Okay, so anyway, you can see it here. Down over here, we had this reversal, and straight up we went. Okay, so let me just try to make this a little bit more clear to you. There it is. This looked like, and this will go on record as one of the largest one-day increases in history. That's true. When you scan out, yeah, in percentage terms, it's high. But look at the absolute level. Friday, kind of surprisingly for me, we're not going to ever get every headline. There is a fair amount of rally. Also, this little uptick here. The moves are so big that what looks small is actually very big. And here is, but nevertheless, here's where we are year to date. So we're going to have all sorts of spin, right? The spin meisters are out on the largest networks now on Sunday morning talk shows. That's a certainty. Where this spin is going to be that, okay, well, we had some recovery on Friday. So I've taken us from Tuesday, Wednesday, Thursday, Friday, and then yesterday this. We've got tariff concession. Tariff concession. That's just in other words, there are exceptions to semiconductors, mobile phones, and consumer electronics, the extra tariff. Okay, so what you can think of as a base level of tariffs, those are in place. Those are not there's no exception being made. On top of that, you'll know there are other tariffs on China, for example. So while the administration did not say it's China specific, the reality is that it was on the sectors where the most activity are between the US and China. So de facto, in effect, in practical terms, it's basically to China. Now, this is a huge, huge thing for Apple, Nvidia. And if you take a look here, let's just see, there is a headline here. It does not say, so unfortunately, so you can see it here, and someone is not convinced. And this is the issue. So first of all, let me just say that without a crystal ball, markets are likely to cheer this. Markets are likely to cheer this. That's fair. That is totally fair. So we've had the retreat on tariffs via the exceptions. Okay, that part now is already old. To give you an idea on how fast things are changing, that's now old. And the base, because I suspect that part of it is that the money being raised for the tariffs are there to try to fund the tax cut packages that the administration and the ruling party, who has been voted in on both houses and the administration. Let's not forget that. That was voted in. So as a result, they do dominate the agenda for sure. I didn't say without pushback, but I'm saying that they are certainly by vote, they are in control of the agenda. That's a fact. That's a fact. The issue is what financial markets had to say. And I discussed this over here. That was the point of having these podcasts here. Because what we have here is the tariffs and trade war have created a situation where some very strange dynamics happen. And here's this one that I stated it here on the 11th. And it's here on the YouTube channel. It's also in podcasts in both places. Basically anywhere you can find, podcasts and broadcasts and videos. Is that we have dollar down and interest rates up to followers of Jay's Corner. Everyone knows it because you're tired of it. One of the main messages to understanding finance, and then whether that be global finance, whether that be personal finance, it is stocks for show, bonds for dough. Why? On a personal level, because for me, financial planning, financial guidance always means how much does it cost? Right? Yes, I want perfect insurance with no deductible and where the insurance pays for everything and I don't pay for any. Yeah, but the question is, how much do you have to pay for the insurance? How much does it cost? In global markets, or let's say, for example, you want to buy or you want to go on vacation. You don't have the cash, so you put it on credit card. Well, they're charging you. What's it based on? Cost of interest. The number one thing affected by cost of interest, the bond market is determining the cost of interest. The bond market is. That's the reference point. The place for that is the 10-year note. To people who have been, to followers, thank you so much. I've appreciated your ongoing support, especially to those people who are subscribed, especially to the founding members. Absolutely. You can see what I'm doing and why I've stated in this way. Credit card balance is high. It's hard to make money in your investments and savings to exceed that rate of 20 odd percent for many of you. Impossible, candidly. You can see what has happened here. That the bond market has not liked the tariff matter at all. Not one bit. This runs very counter to what we normally believe. What we normally believe is that when people want to sell risky securities, stocks, high yield bonds, especially stocks, you buy bonds. This is the rationale for dividend stocks, for example, which I don't agree with, the subject of a totally different podcast. And remember, still not financial advice. That this runs very, very counter to everything that we are told about the way that assets get allocated. Out of risky into risk-free. Makes total sense, makes intuitive sense, certainly common sense. That is the way that we normally believe the way that financial markets function. That also means, incredibly, that also means that when it doesn't work in that way, the world must, absolutely must take note. You cannot just sit there and think to yourself, oh, well, it's going to be fine because, all you have to do is you sell your stocks. Yeah, but they're selling their stocks to buy bonds. And bonds are going in the opposite direction here. You can see this. What happened? You can see how much, for example, right here. I'll stop fiddling. You can see here that the bond market detested the tariff tantrums. Now, for this reason, this explains why Tuesday's pause. Straight down we went. Equities straight higher. That makes sense. Absolutely. Right? So now, but the problem here now is the fact that we have got a bond market which has continued to stay weak. The world's more uncertain. It doesn't matter what your stance is. It really does not matter what your politics or philosophy are. The world is more uncertain now. We should have seen money flow into the bond market. We didn't. We are still much weaker in bond world. Now, when I've said stocks for show, bonds for dough, I did it for brevity's sake, right? Brevity is the soul of wit, according to Mr. Shakespeare. Here's the issue, is that in addition to that, to make it even more dramatic, what we have is not only is the bond weaker, but the US dollar is much weaker. This is the euro. From 102 to 113 within a month, within what? What is this? Since the beginning of the year, certainly, and you'll see this similar pattern. That along the same lines of the idea that people are out of stocks, out of risky, into stable, reliable, dependable, which would have been the US 10-year note. And it also means the conjoined twin, the US dollar. Hasn't happened. And this is where economies move. This is the location that economies move. And if we actually had the shorter chart, let's just see if we can, just to give you an illustration. At one point during Friday, you can see on the 4th, you were all the way up to 114, 114 odd in the euro. You can see where it says high, 114.12. And still, even after and this was just on Friday. You can see this is 4 o'clock. This was on Friday. And you can see at the worst here, 114.75. These are wild moves. It doesn't look big. I can understand that for this number here to be to have it having a 1 here is just incredible. At certain points on Friday, it was 2. In professional markets, they call this the big figure. The idea that you would move a full big figure is crazy. The idea that you would move 2 big figures is like 10 times as crazy. Right? It's not linear. For me, these were the signals that ultimately you had to reverse course. You had to have these exceptions. That this is the reason. Not that Apple, the price of Apple was down. I just don't believe that. This, however, is because this is the lubricant of borrowing and lending and global economics. Right? An exporter sells something to a US consumer, they get dollars and they keep them in dollars. So what do? They store them at the US dollar account of a US bank, or they buy US Treasury bonds. They didn't. And the reason I'm speaking this slowly and this emphatically is that this doesn't get headlines that, well, it does now because it's so dramatic, but this has always been the case. Right? This has always run in the background all the time. And that's why thus the mantra, stocks for show, bonds for dough, right? I understand it's not as exciting. It's not as fun to see Microsoft stock, Facebook stock, Nvidia, names that everyone recognizes because you know that what they are, you use their products on a daily basis. But the real mechanics are down over here. The real way that it works underneath the hood is here. So when this gets disrupted, and it keeps getting disrupted to this degree, right? For me, then the reality is even that basically you had no choice. And thus you get this fault. And this is a fault. Do not get me wrong. This is a fault. Right? You can call it whatever you want, reversal, whatever. It's a fault. And when I use the term fold, I'm going to refer to what I think is the most important video on this channel of recent days, right? In other words, over the past few months, I try to crystallize certain facts and the way to think about them and the way the reasoning would work, which can be applied in many, many different ways when you're thinking about, financial matters. And that's this video here. which is how is poker like investing? And we've got this episode. And you don't actually even need to know how to play. You may not know how to play poker. It's fine. It doesn't matter. This is about decision making. This is about decision making and the fact that there are other competitors there, other counterparts there. And it's a cautionary tale amongst the best in the world. These are the best in the world. Give or take, yes. We'll break it down. We're not going to watch the video. Number one, this is way more complicated than people think. You're the casual observer. You think that poker is just, wild cowboys just, sitting out there winging in chips into the middle of it. No, no. This is the math of poker probability, and then thought through using AI tools to go around and around to help people understand what kind of decision making they should do. This is at poker, right? Meaning that it's a far more limited thing than what we are dealing with in the real world under this controversy amongst tariffs. And you have the most capable. This person gets pocket aces. He's way ahead. He's advantaged. He's inherently advantaged. But facts change. And now he gets a new job. He has a new objective now. We have new facts. We have a new world. We have a new way of relating across the counterparts here. Brought on by this tariff tantrum. I'm not going to get into all the different ways here. And you can see here, I'm not alone. First of all, I'm not alone, right? This is the ex-CIO of PIMCO. He's, this is like crazy, right? He's president of of Cambridge, right? And former PIMCO CEO, co-CIO. Very well known. Very frequent provider of these entries, posts. Scenes of initially performed as expected, then suddenly and violently switched directions, so don't worry about market strain. And that's basically the summary here. But my favorite video here is talking about the different ways that people, now you have this new objective. You've got this new objective which can be for all parties, right? You can see here that this same set of facts, the same situation, how to help yourself understand. And now he went from way ahead to way behind. Oh yeah, and by the way, and now you can see it. This is the graph that I show on many videos here, as well as on the newsletter. You are starting from where you are. The facts changed. You're still at the red arrow. There's a reason that I try to create these little slogans, right, for people's understanding. Start where you are. You're here at the red arrow. We're here at the red arrow now. Let's not look back through what a good idea or a bad idea, et cetera, about how we got to this. This is our spot now. And that's why, for example, in this article that I wrote about what was going on and why and what happened is you can see folding is probably right. Folding is probably right. We're not talking about throwing mud balls at the present. No, I'm not, right? That is for somebody else. Did I think this is a great idea? Well, I'll let the economist said and the fact that it is self-inflicted. This is not me alone. This is basically this is Jamie Dimon. This is Larry Fink, who is the CEO of BlackRock, all calling it the same thing. right? The other pros at the real global pros at the table, right? That sit here have this opinion about the situation. But you can see what I've said here, which is that, okay, now that we're here, folding is probably right. In other words, now the job has changed, right? He's in trouble. He knows it. Let's lose the least. Let's not make a bad. This is not a good situation. This is not a good situation where the dollar is being challenged as the safe haven. This is not a good situation where the US 10-year treasury note is not the absolute, safe haven. These are not good. These are not ideal situations because of the fact this is what has defined the characteristic of US American exceptionalism. This was the market telling you that the US was exceptional, that the dollar was stable, that US Treasury bonds were stable. So that means if you put a minus sign, you then have to call into question whether or not the other guys at the table believe that the United States is the exceptional, and that's the point. And now you can see how it ties together and why I've had to hit record with Cass. Where are we now? Well, first of all, a couple of just the simple. The Fed has received a lot of heat, including from here, right? It has seemed tone deaf. One consistent point that the Federal Reserve has made, which is we don't have a political view. We're watching and seeing because it's very uncertain. Very clear. They're watching to see what the administration does so they can see what the ripple effect is so they can then act appropriately. They get lots of flowers here. It actually, when I said that they were tone deaf 2 weeks ago during the latest press conference, I said that was a very big departure here. They've gotten the benefit of the doubt from me, even if I wouldn't have necessarily agreed with every last sentence. That's fine. Overall, ridiculously hard job. Chairman Powell wildly underpaid, $175,000 a year for someone with that role. You've got to be kidding, right? $175,000. He'll get it back. Let's say that a week after his tenure is up. Don't get me wrong, but $175,000 will be the cost for a single speech. Pretty sure that's the case. But they've exercised great restraint here, right? Because otherwise they would have bombed in here this past week here to try to buy treasury bonds to try to. They let it play out. Because why? They're watching to see what the policy volatility would be. So even though it's a folding is probably right. That's what the conclusion would have to be. There's some opinion in that, right? It does have ripple effects. I've written about it here. My issue here, and this will be almost to the end. We're coming to the end. Ish. We've got important last points about how to understand all of the fire and the hot takes that you're about to see in the press and in markets. The problem for me is that we've let the cat out of the bag. I wrote on election day that elections can't fix this. We don't have time today. Ray Dalio said the very same thing on Monday. Right? Americans exceptional. The companies awesome. Right? The very best companies have done amazing things. Right? Apple came from the ashes. People don't remember what Elisa was. The people running them, of course, had predictability of structure of business to be able to flex, and they used it and they propelled the United States. They have receipts. No doubt. No doubt. The direct people supporting those persons also benefited. No question. No question. You've worked at Google for 20 years. You're well off, no doubt. You've earned it. You'll never. The problem is the average person. The average person's math still is many years behind the person in India. And it's even worse anywhere on that side of the planet. Anywhere. 3-4 years very easily inferior from the time that you're 10 in the United States. 10, 12. You're 3 years behind. I told this story to the subscribers. When I was 7, my mother used to try to teach me multiplication tables. Was I 7? Maybe I was 6. Right? She immigrated from Korea. I was like protesting like crazy. It's like, other kids don't have to do this. Other kids don't have to do this. Why do I have to do this? I'm 7. She must have looked at me like, you're the dumbest kid on the earth. Right? Because she only knew her context. It's time. It's time. That was a long time ago. I would just leave it to you with this. In Asia, a junior high schooler knows calculus. Okay? And that person is not a freak. That's not an everyday person, everyday junior high schooler. But that junior high schooler exists. And that person is not a freak. To give you an idea about the context of the average. And the issue here is that other countries now have known this, and now the dollar and are not the safe havens at the same time. And I don't know how to get us back out of that, and I'm very sure that an election wouldn't do it. And for that was the reason I was saying that elections won't fix this. And that's exactly what Ray Dalio said. I will, at some point, find that clip and include it here. And this volatility will almost... I don't see a way around this. The uncertainty caused will hurt the people in the United States, and those people are the ones that can afford uncertainty. They can't have a thing uncertain. Medicaid. 70 million? 78 million including. You can't have a dollar in question here. We can't have our future prospect of our employer here. We can't. And so to tilt the apple cart here, to hurt these people, I don't see the point. I'm not affected directly. I am empathetic to those who are struggling. There's a reason that I don't say never Medicare Advantage. No. Right? We've got everyday people who are under duress. That doesn't mean we won't make it. That doesn't mean that I wouldn't help them. No, I will absolutely. I've helped so many people on Medicaid and on Medicare and to get to Medicare Advantage because that was prudent. You're Mr. Perfect. You're living check to check. You live an issue with 300 kids. You don't know what to do. Medicare Advantage for you. I will find the most efficient spot from there. But how much does it cost? And then you get to, and then we need to keep the lights on. This uncertainty is hurting them the most. And this is why the animation here. Let's get to the ramification here, the implications, and then we'll call it wrap. These are important implications. You are going to see a bunch of different spins, right? We're going to get revisionist history, and the narratives are going to be like wild. They're going to be wild. I think that's hyperbole and hyperspeed, right? Doesn't matter. Look, you don't have to judge by what they say. You can judge by what they do. I imposed tariffs. I reversed course. That's a fold. The end. Right? To gloss over, to call this a victory, to call this somebody. So then your question is the following is, okay, technically speaking, not technically, factually speaking, tell me this, what has actually been accomplished? What has actually been accomplished? And when I said that, somebody's going to unsubscribe to, the people who unsubscribe from the newsletter, which I just sent out, right? They don't want to see the facts, but that is the fact. If you judge by what people do and not what they say, you get there. Beyond today, we'll not get to the very last, is Warren Buffett is very famous for this phrase, which is when the tide goes out, you find out who's swimming naked. I could use that phrase to point out all the weaknesses that I see here on YouTube. We run a small channel. I run a small channel. It's gotten bigger, notably bigger, 25% over the past month. Largely probably because people have started to see. You don't see that I'm presenting just facts and these points until the rubber band gets stretched and go, oh, wait. That's why I have to keep saying it over and over. You got newcomers, you can forget. You can get immunized, that's not the right term, is it? Desensitized. There were things that were always wrong right from the moment they came out. But because of the fact that the current conditions supported it, it could look and sound right. 8% rule. You must be kidding. This is Dave Ramsey. That's you. 80% stocks, withdrawal rate from retirement savings of 8%. What is going on? That was never right. This is the actual slide that I had created at that time and the video that I made at that time. I'm going to bring that up in just a moment, by the way. You can see here, I dated it for you. What ends up happening here, right? And you can see, because even with Monday, let's just say that Monday is a rally due to the fact that of the reversal, we're going to have some cheerleading, no question. Right? I think that is fair. Whether or not you can actually execute is a different thing. This is not financial advice. But you can see my point here is if you had pulled out from here at any point down here, you pulled out your 8%, and now you're pulling out at, and let's just say, for example, your portfolio is down 10%, and then you put 8%. So now you went from 100 to 90, and minus 8.8% from there is another 7.2, which makes you what? 82.8. That's what's happened to your retirement in 3 months. To give you, it's an illustration about the fact that this was poorly formulated right from the beginning. But when the market is up 20%, it can look and sound right. Oh, except, one small thing that someone left out. It can go the other way. Facts can change thus the poker video. That's number one. Easy. If you go on YouTube, you will see the one portfolio that all you need for a lifetime. We've got some person on TikTok who literally broadcasts for like 4 hours live at a crack about dividend stocks alone. That's it. You gotta be kidding. Third one is more subtle, but it is another one, which is we have these portfolios which show, we've got these videos which show projections under retirement. For me, this is glossing over these matters. I've already, so nice I said it twice. These are glossing over these facts. You understand now why here on Jay's Corner, I'm focused on healthcare cost control. I didn't say, don't ever go to the doctor if you're sick. I didn't say that. That's healthcare. I'm talking about healthcare cost, right? How much does it cost? Healthcare cost projections. How are we going to handle this? Mr. Perfect has a wildly different set of projections than Miss Sick-a-Lot. And that's not anything against women. We can call it Miss Perfect and Mr. Sick-a-Lot. I don't care. My point is your cost projections here are different if you understand how it works. I can tell you, and that's not only a negative thing. I know that the world wants to focus on negative. To Mr. S, to Mrs. S, the door swung open to retiring early. Why? The door swung open on the cost savings here on healthcare costs. We reduced the volatility. We reduced the absolute dollars. We reduced the volatility, and we did it immediately. So as a result, the fact is $1 today is worth more dollar than $1 in the future. How about $10,000 more today? In other words, it totally changed the projection going forward when we are looking at this timeline here as something that I've shown on multiple occasions. Because now our net worth here is preserved. The problem that you have here all the way through YouTube is that this gets blown off. Oh, well, it costs this. Huh? Meaning that they're using average as facts. Average is a number of sum divided by n. That's it. You need to you are best served by not having the average and just plugging and playing. These other videos that just are focused on overall this or the other aren't specific enough for your individual situation. Nowhere close. Oh, I don't understand Obamacare. I didn't like Obama, so as a result, that's your excuse. Oh, well, it's, United Healthcare is trying to rip me off. That's the excuse for not understanding and optimizing here. And now, of course, this. You will see everywhere. Everywhere. Well, I presume my portfolio made 7% a year. That's the historical average. You know where historical average doesn't matter? The moment that I show you this. Yeah. Historical average, same. Total number here. Wildly different. This is not even with withdrawals. This is not with withdrawal. This is not with the idea there's inflation. This is not you had an emergency that you needed to have an extra amount. Your adult child had an issue and needed extra support, so you took it out. Right? I'm not even debating whether or not your value judgment is wrong. I'm going to presume that's your money. You need to tell me, we will deal with it, But the issue here is that the ripple effect of kind of just glossing over this and just presuming average portfolio return here, its ripple effects when this gets introduced, now you have a totally different net worth. Totally different. I'm trying to help you avoid that kind of situation. So, you've got everything in full flight here. Thank you so much. And guess what? Like I said, Cass, so valuable, so valuable. And you can hear her voice. All I told her is be snarky, be the most qualified, and be sure to keep up. Cass, why don't you take us out here? We're done here on this edition of the live stream.
All right, wrapping up here. Thanks for joining us on this edition of Jae's Corner.
Hold on here. And now you can see there are going to always be glitches. It's like wild. Let's just see here. Where are we? There you go. And you can see what I've done. Cass, why don't you take us out? We're done here today.
All right, folks. That's a wrap for today's Jae's Corner. Remember to like, subscribe, and follow us on Spotify and Substack. Until next time, stay sharp.
Who do you think is going to win the Masters today?
Well, Jae, if I had to bet, I'd say Rory's got a solid shot, assuming he doesn't pull a final round meltdown. But hey, anything can happen. What's your take?
Well, I've been waiting and hoping for Rory to finish the career Grand Slam for a very long time now, so I can't wait. It's going to be an exciting afternoon.
Absolutely, Jae. It's been a long time coming, and today could be the day. Fingers crossed for Rory. Let's see if he can finally seal the deal. Should be a thrilling watch.
Have a great weekend, great week, everyone. Great